Everyone, Douglas here, Kenner Market Analysis, and welcome to the weekly macro update. It is Monday, June 1st, 2020. It's 11:40 p.m. Eastern Standard Time as I hit record and get things rolling on tonight's update. And we're going to start things off tonight with a discussion of really the federal or fiscal side of the economy and the impact of that. And we're actually going to look at what's called the daily Treasury statement, which is really the Treasury's balance sheet, and kind of try and begin to build a framework of the implication of what that means. And I know this might not sound kind of right out of the gate like the most exciting thing in the world, but I really promise you by the end of this video, and I'll probably make this into a 2 or 3 part series over the next few weeks where we kind of build on each video, very similar to what we did with the Federal Reserve videos we did about a month ago, and understanding their operations. We'll do something like that, build up over the next few weeks, see what sort of kind of feedback questions I get, and go from there. But I really promise after the end of this video, if you can really grasp what I'm saying here and get a framework built like I'm going to show you, I think you're going to get a much better understanding of how not only the economy works, but ultimately how the economy essentially funnels into kind of the financial economy and even into equity markets. So we'll cover a lot. It'll be kind of at a basic level to begin with. So if you've followed me for a while, some of this might be stuff you're kind of already aware of, but I think it's important to kind of reestablish that base and kind of build from there. So with that being said, I'm going to kick things off with this video by jumping right on into, like I said, the daily Treasury statement here. And I've got this pulled up, and the daily Treasury statement is a document that is published daily, as the name would suggest, and you can get that right over at the treasury.gov website. Here's the URL, but if you just Google daily Treasury statement, it'll come right up, and you just click the current daily Treasury statement. It'll bring up all the archive of all the Treasury statements, and I think in the current kind of formats, the PDF and text formats available go all the way back to 1998, and I think you can even get them further back in different archive series. But either way, what we're most interested in is actually we'll take a look right at today's day, or I should say actually the finishing day of last week. The last day of last week was the last day it reported, and we'll go ahead and pull up that daily Treasury statement here. And this is the balance sheet of the federal government, and there's a lot of detail here, and there's a lot more to cover than we're going to go into, and there's a lot more that's issued in this than we'll cover. But what I'm most important, or what I kind of most want to focus on, what's most important is really this category right here called withdrawals, because that is really government spending. That is what gets called the deficit. This is what the government is doing in terms of what I generally refer to as fiscal flows or new money coming into the economy. It's coming right from here. And for the time being, I'm going to set aside any discussions of how this gets paid for, the mechanics, what happens to kind of the other side of the balance sheet, the deposit side. Any discussion like that, we're just going to set aside for now, so we can at least have a framework or concept in our minds that we're working on and we're building from. That when we do have those kind of later discussions about, okay, where does this money come from? What's the implication when it comes to kind of more monetary theory, if you will, that at least we have, again, that really it's going to be a flow of funds style visual in our mind to understand kind of how to discuss this. And I really think it simplifies it in a way that makes it far more easier to understand when you start kind of doing some essentially some algebra to the equations to understand exactly how all this sorts out. So let's just give me the benefit of the doubt for now. Let's just focus on the withdrawal side, and then we'll go from there. And the withdrawals, like I said, is money going out into the economy, and this is where the deficit's going to come from. This is where the big numbers are going to come from, and we can kind of see that in just a second. I'll show you. But what you'll notice is one, if you're familiar with this, you'll notice a much longer list of outgoing withdrawals here. If we switch over to a year ago, June 3rd, you'll notice a much shorter withdrawal list, a more common withdrawal list, and you can see some of the biggies that the government spends on. Taking a look at, let's see, Medicaid, multiple Medicaid payments, and just so you know too, this is in rounded into the millions, so this is $266 billion for Medicaid. Again, this was fiscal year to date 2019 as of June 3rd. You have what are some other big ones? Social Security at $631 billion. You have veterans payments. You have unemployment insurance. You have food stamps. You also have federal salaries. Yeah, I mean, you can obviously take a look at every line item that you'd like. The largest on the list that will obviously stick out here is the public debt cash redemption. This is essentially the buying back of treasuries. So in terms of actual fiscal spending, that's not so much kind of a true line item the way everything else is. So for at least our purposes now, we can disregard that. But anyway, moving forward or moving back to this year's, you'll notice a large expansion, and this large expansion, as you would expect, is all due to the fiscal response to the coronavirus. And you can see out of this, there is the coronavirus relief fund that is I haven't figured out. It's either the coronavirus relief fund or it's the IRS tax refund is housing the actual stimulus payments. I haven't exactly looked into it too deep, but I've noticed both of those have changed large enough to account for that. But either way, you've seen a lot of all these HHS funded or spending that is new from the year or from even a couple months ago prior. A lot of the fiscal response are in those. So this is the money that is going out, and this is again, this is the Fed's balance sheet. And for now, we'll kind of stop there, and you can just at least kind of digest that and understand that. And we're not going to stop with the video. We'll keep there's some other things we want to kind of keep building upon, but at least understand that this is the money heading out. And again, if you want to keep looking at the money coming in, some agencies actually have an income source that goes onto the balance sheet, and then obviously there's taxes and that sort of thing. That right here is the big line item for taxes that comes on in as well. So with that in mind, that there's really, if there's any kind of takeaway I want you to get, is that the fiscal side, right, the Treasury spends money and receives money, but more importantly, it spends money, and obviously we've had a deficit for 200 some odd years, so clearly they're in the business of spending, and that money is going somewhere. And this is going to be the important step that I want to really jump into next, to really kind of think through, and that we'll really build upon in the coming weeks as we kind of dive into that, is that money. We saw some of that as wages, right? Some of that is buying goods and services. That money is going to someone or something, and that someone or something that's going to receive that money has to do something with that money. So with that in mind, with that kind of starting point in mind, let's jump to a flowchart application here, and let's think through the implications of some of this and kind of build upon exactly what's happening with that money. Again, what we saw was Social Security, we saw Medicaid payments, we saw wages to federal employees, we saw defense spending, right, that is all heading out from the fiscal balance sheet. Okay, and so we can start drawing lines in terms of kind of a flow of funds style model here to better conceptualize exactly what's happening, right? So we saw that there's some money going to businesses, and there's some money going directly to households. Social Security goes directly to individuals, right? And likewise, we also saw that households pay taxes, and so do businesses pay taxes. So we have money coming back into the federal government as well. We also saw on there, although I didn't point any of this out directly, but we know this, that the federal government deals directly with its central bank. That would make sense. And the central bank deals directly with the financial sector, and the financial sector will also deal directly with the central bank. For the most part, the federal government stays out of dealing directly with the financial sector. It's usually done, and the financial sector is pretty much banks. Is kind of what I'm including in the financial sector. But there are some very basic flows that are occurring between the financial sector, households, and businesses as they relate to the federal government or the Treasury that we were just looking at. Now, when the households get that money, right, you can only do one of two things when you get money, okay? And this is really a very simple concept that I think we all kind of, in the back of our minds are well aware of. But it's really important to understand when it comes to, understanding how this money that gets ultimately created by the Treasury goes into the economy. And we can only save or spend that money, okay? So if we are going to save it in the forms of kind of investing or whatever, that's going to end up in the financial sector. The other thing we can do is obviously we can spend it on goods and services through businesses, and so that money. So I'm thinking like Social Security, right? Or even if you get, we'll go on to this in just a second. Even if you get a wage for businesses, you still have to at some point either save or spend that. Likewise, we can also, or the household sector, so when I say we, I'm meaning the household sector can also leverage up, right? We can take money out of the financial sector in the form of borrowing and leverage up, and that gives us a new channel of income. And like I was just mentioning as well, the business sector will also pay wages to households, right? So that is another channel of income. So again, I hope that you're starting to see this kind of, these circular motions of money flowing through the economy, and essentially how it's just one handoff into the next in terms of exactly how this money goes through. So in reality, I mean, what we need to get this money flow thing started is just one of these sectors to create the money and start to do something. And in this case, we see that it's the federal government, the Treasury, that is doing just that, right? They're spending this money into existence, and this money, is the kind of necessary fuel, if you will, for this cycle to begin. One other sector as well that's worth noting is the foreign sector, and this will come in later weeks. Obviously, our businesses, households, and financial sector are all going to deal with the foreign sector, and so is the central bank. And so what we'll do to just kind of simplify this for now, just to kind of show that there is some happenings there, is we'll turn these into double-sided arrows, and we'll kind of put a placeholder for later, just knowing that there is another major sector. So in reality, we end up kind of having three broad sectors here. We have the government sector, right? You can call this the public sector. We have the private sector in the middle here, and then we have the foreign sector as well. And there is just an exchange of funds that's happening through all three of these sectors. And the big takeaway to kind of wrap up this part for now is that the money that's coming in terms of the Treasury into, again, I'm going to switch back real quick to the balance sheet. When we look at things like Social Security, where is that on here? Social Security let's see, is this this is here. Social Security at $639 billion this year, right? Again, that money, when we then look at our flow chart, that money is going into the households, right? It's going into the recipients of Social Security, and that money has to go somewhere, right? They either save that money, meaning it goes into the financial sector, or they spend that money on business, goods, and services. And I'm realizing that I'm forgetting as I do this one final connection that's really important is that businesses will also put its savings into the financial sector, and likewise, businesses can leverage up from the financial sector as well. Very important oversight there. So even if the household spends money on a business, the business has to decide, okay, I'm either going to give that in wages back to the households, in which case they can give that to me, me the business back, or if I'm going to save or invest that money in some way, that's going to go into the financial sector. And what's most important, again, the big takeaway here is as money ultimately flows from the government into the private sector, that private sector at some point is going to put that money into the financial sector, and a small portion of that actually quite a large portion of that financial sector, but a very at least the part of the financial sector that we care about in terms of what we're trying to do here is going to be equities, right? At some point, that money is going to find its way invested in stocks, invested in bonds, and it's going to be that's going to determine the prices and ultimately determine the demand of the equity space, and that's the big takeaway here, and something that I hope you can grasp. Because sometimes, and I've been very bullish since the sell-off. I've been very bullish for quite some time now. Obviously, the coronavirus took me a bit by surprise. Quite admittedly, took me a bit by surprise in terms of the sell-off that occurred. But either way, I've been quite bullish on the market since then because we've seen a massive jump in the Treasury spending. Okay, and over the years, I've developed a little bit of a methodology to really understand what the most important flows are, and we look at that each week. Obviously, as kind of a base to our analysis. But as we see the deficit, kind of explode here, to me, that's a plus because regardless if it's money well spent or not, it still is money that is flowing through the economy no matter what. Is it the best use of the resource? That's a discussion that can be had, but that's not a discussion that we should be having with regards to the impact of what it's doing to the kind of the flows, right? The point is it might not be the best use of the resource, but nevertheless, it's a resource, or it's a money that's ending up in the financial sector one way or another. And so, in part, this is a very important component to understanding, what's going to drive equity prices, because unless there's new money coming in, those equity prices are not going to be going up in value. So I hope that this, kind of flowchart visualization that I kind of did piece by piece is helpful, so you can see how money coming from that government sector is finding its way in ultimately to the financial sector. So what we're going to do next week is, hopefully if we can get to it next week, is we're going to play around with this a little bit more and start to shuffle around some of these things and look at this in a little bit more depth to understand some kind of deeper insights and maybe some more implications as a whole from this whole setup here, and just kind of continue to build from there. So if you have any specific questions with kind of what I'm doing here, by all means, please let me know, and then I can kind of hopefully build those in to the discussion next week. All right, that's going to wrap things up for this preview look at the macro update. And if you're new here and you haven't yet hit subscribe, make sure you do that and turn on that notification bell as well, so you won't miss an update going forward. And if you found this video particularly helpful, hit that thumbs up button as well. And if you want this complete update and you're really just kind of interested in what I'm doing here, the every update I do and everything I post is over on my Patreon page over at patreon.com/KennonMA. The link is in the description below. You can find me there. 2 Elliott Wave updates a week, and then the big macro update every week as well, including every one of my trades, and access to my Discord server where I have kind of discussions going on almost every day of the week on there as well, and kind of mini updates as well as things kind of unfold through the day. So if you're interested in that, again, patreon.com/KennonMA. Anyway, I will wrap up this video here. So good trading, everyone, and we'll see you next time. Bye-bye.